Hello, everyone, and welcome to the Cash Rules podcast. My name is Keith Smith, and I'm here with my co-host, head researcher, educational program development specialist,
Fabyan Rodan. How you doing, everyone? Welcome.
Welcome. And we are here with our guest, Michael Nash. I want to start off by making sure that we are all aware that none of what we're discussing today should be taken as legal, financial, and or tax advice. Instead, the objective of our conversation today is to highlight the unspoken rules in finance, discuss why these concepts so often go unspoken, and what we can be doing on a practical level to change that reality in an informational, educational capacity. With that said, Fabyan, how are you doing today, man?
I'm doing wonderful. Blessed and highly favored, as they always say, but even better and higher. How you doing, Michael Nash? Welcome to the podcast. It's a wonderful feeling to have you here. I mean, you're looking like a wonderful individual, bringing such a great energy, and I'm hoping that you can bring some awareness to our viewers.
Thanks for having me on, guys. I'm looking forward to sharing anything I can to help somebody.
Very cool. Well, yeah, just to get started, the first thing that we wanted to know is, tell us a little bit about your background, where are you based? Tell us a little bit about your history and what you're doing right now.
All right. Condensed version. Born and raised Chicago, Illinois, on the South Side. My mom is from Chicago. My dad is from a small town in Mississippi, has a manufacturing background, worked at a food processing plant here for 40 plus years, swing shifting for 40 plus years. And I think that's where I got my work ethic from. Currently, I am a real estate broker by trade, but I'm a bit of a serial entrepreneur because I'm also involved in currency markets, content creation, and a couple other things. As far as my interests, financial literacy is one of my big interests, along with I'm kind of a nerdy Black guy, so I like outdoors. I like hiking, working out, biking, museums, and I've been to 117 craft breweries across 12 states.
Beer guy, I see. I love it. What's your favorite kind of beer?
It's actually a beer I had at this little small batch brewery in Vegas. It was a watermelon wheat ale, and that was like, I guess it's about the fruit that they were able to get there. It was just like the best watermelon-based beer I've ever had. But I've had beer brewed with everything. Beets, awesome. Potatoes, pumpkin, chiles, you name it.
Very interesting. I've never even heard of that, man. got me about to Google these.
Really quickly, Mike, tell us how long you've been a licensed real estate professional.
Oh man, I cut my teeth in the business in the Great Recession, 2008. I got in at the worst time to enter the business in 60 years, and I'm still here.
Okay. And tell us a little bit about that entry into that market. Like, where were you? What was going on through your head? What was your day-to-day looking like? And when did you realize that was the worst time to come into the market in 60 years?
Well, at the time, my son was he was getting close to 2 years old. To backtrack a bit, to do a full 180, I was a truck driver. Now I own my own truck. And before that, I was an IT professional. That's what I actually went to school for. And then I discovered that I did not like corporate America. So I did a 180, got a CDL, drove a truck for several years, owned my own truck for a while. And then I decided I need to come off the road so I could be there for my son. And I decided to get a real estate license. I was always interested in it. I knew that it was challenging at that time. I didn't know it was as challenging. And I figured out a lot of different alternate methods within real estate to make some money to get through those first, I would say, like 3 or 4 years. It wasn't just like 6 months. It was like 3 to 4 really tough years before it started to pick up for me.
What were some of the biggest lessons you learned from that then?
I credit real estate with teaching me patience in everything that I do. Everything that I've done from that point on, from getting my license, whether it was learning to trade stocks, self-taught stocks and options, content creation and trying to build an audience, I got used to not being compensated for what I did today, tomorrow, or next week. And in some cases, I mean, I've literally had a deal that took about 158 days to close before. So you learn the patience and you learn to appreciate the process and what you can learn while going through it.
That's awesome. That's awesome. Do you have any challenges or any kind of problems that you think that any humps along the road that actually helped you as well too?
Learning to fight for my clients. I mean, I purchased real estate for the first time well before I got into business in my 20s. I bought my first home. And I did really well when I sold my first home about 5-6 years after I bought it. And I thought I knew something about the business and tried to take that profit and go do some investing. And I mean, long story short, I lost it all because I didn't know exactly what I was doing. And I didn't have the most ethical guidance. And that definitely helped shape me moving forward as a broker. But as far as one of the biggest challenges I've had as a Black real estate broker is valuations of properties. These articles that you've seen floating around about the bogus appraisals, I've been dealing with that my entire time in the business. I've probably fought at least 15, 20 appraisals, and I've probably won about 60% of them.
I definitely want to kind of go back to that appraisals at some point, but I kind of wanted to go back to the bankruptcy. You mentioned bankruptcy.
Mhm.
What is the biggest lessons you learned from that?
It made me get serious and learn about money, because prior to the bankruptcy, I had a very good credit score in the 720s, 730s. I really didn't have any clue how I got it. I wasn't using my credit properly. I was just paying bills on time. But when I came out of the bankruptcy, I made it just a point that I was going to learn everything I could about money and credit and how it worked and how I could make it work for me. So it was a lot of trial and rejection, but eventually, I got to where I am now from a 0 to, scores in the low 800s. It was a fight though.
I want to dig into some of the bankruptcy, because I mean, that is definitely something that a lot of people, especially around that 08 sort of era, had to go through and that they dealt with. Tell us a little bit about, like, what exactly does that bankruptcy process look like? What did you have to do? And then what were some of the results afterward of the bankruptcy?
Well, what got me into it was I explained that I had the trucks. So I had a really bad accident. And again, I'm kind of green out here in the business world. And I found out I was underinsured. So I had some litigation behind this truck accident. Thankfully, no injury, no loss of life, but I was basically sued for doing environmental damage to a highway from the spillage from my truck when I had this accident. And I lost all my income. I had gotten a couple of rental properties. One was a really solid deal. I actually bought it directly from a bank for $12,000, a 2-flat. But I had this one rental property that kind of was a bit of a money pit, and it just drowned me down. I hung on too long. I didn't actually declare bankruptcy until spring of 2011. And then when I came out of bankruptcy, I actually felt great from my first consultation with the bankruptcy attorney. I knew I had a long road ahead of me, but I knew I also had a clean slate now. And when I came out of the bankruptcy, the biggest mistake that I made was I was so embarrassed that I didn't reach out to my resources for help to know what to do. And I thought you had to wait before you started rebuilding your credit. And I actually waited like a full year before I even started my credit rebuild. I actually talk about it in an ebook that I'm writing right now.
And what is the name of that ebook?
From the outhouse to the penthouse, my credit journey.
Oh, I love it.
It's going to be included on a website/blog I'll be launching 4th quarter this year. It'll be like free content.
So really quick question.
Mm-hmm.
So you said that you also dealt with a lawsuit, and I just wanted to quickly understand, was that lawsuit from a municipality that came after you?
It was actually from the state that I had the accident, the Department of Transportation.
Wow.
And I thought that I was, again, kind of green, naive. I had a little savings. probably like 20, 30 grand. And I hired an attorney, and before I knew it, that money was gone. Between, billable hours and all this stuff that I'm now learning as at the time, like a 30, 33, 34-year-old man going through for the first time and not really having people that I could go to for, business related advice. So yeah, it wiped me out, man. It took me to where I was getting garnished, no bank account, no credit cards, no debit, no nothing.
And I do want to continue to kind of go down this line just a little bit, just because I think there is potentially also a lesson around insurance here.
Absolutely.
And although, like, obviously when it comes to unforeseen incidents, there's nothing that you can do to prevent things like that from happening. And so what types of insurance would you have potentially been able to have, or did you not have, that would have covered something like that? And talk to us a little bit about some of that.
Well, when I bought the rigs, I basically just went off of what the insurance brokers were telling me that I needed. And it turned out that I wasn't covered for certain types of like hazardous material spills. And since I had, a lot of people don't know that you could even be carrying laundry detergent. And if you have enough of it, that's considered hazardous material, because it's actually flammable if it's enough of that particular product. So I just wasn't covered for the type of accident that I had. I was actually carrying cattle seed, but I probably spilled 120 gallons of fuel as well. It was a mess. And I was really blessed and fortunate to walk away from it without a scratch.
Wow.
Is that one of your precautions you would take for anybody who is a CDL kind of driver? I know many CDL drivers right now. Some who are now just getting into that hazardous waste driving, because it's such a high demand right now because there's CDL drivers across the country. Is that one of the biggest kind of advice you give a new CDL driver, is to definitely read up on a lot of the insurance policies that are out there?
Absolutely. If you're going to be independent, since I was independent in business for myself, and I, hauled everything from just general freight to actually for a little while, I used to fill gas stations. So I had 8,500 gallons of fuel on my back. Wow. to go and fill up a gas station. It's actually filled up in the ground. But I think I was too gung-ho to get out there. I mean, I was just really excited to be my own person, and prove that I could do it. And I just, it's kind of like doing a math problem. There's some calculations that you actually can't take shortcuts. You have to follow every step. And I think I just missed some steps and paid for it. It set me back years.
So this is really good stuff. And I want to keep going down this line just a little bit further and in a different way. And I thank you for being so open about all of this, because it's super helpful to like understand the scenario that you went through. And earlier you also mentioned, and I'm not sure if this was referring to this particular incident or maybe also with some of the appraisals and some of the stuff you dealt with in real estate, but you mentioned this term ethical guidance, sort of a lack of ethical guidance that you received. And I wanted to understand maybe like some of what that meant to you, and what exactly were some of the things that you experienced.
Well, I had a broker that I thought I really trusted. And I think that he needed a closing. I don't hold any ill against the guy, but he needed a check. And that last deal that I closed, had I not bought that one, that was the albatross. And it did shape the way that I give service to my clients. I mean, a young couple that I just recently sold their home, they wanted to start investing and they were interested in this home. Now, keep in mind, one of the things I did in my early days in real estate was I was a CHA, or a Section 8 housing inspector. So I went all over the city, all 77 neighborhoods in Chicago, every income bracket, everything. And I knew that this particular pocket, they were looking at the potential profit per month, but I'm like, y'all can't handle this demon right here. Y'all can't handle this area. And they were so happy that I was truthful with them and didn't put getting a check in front of the best interest of my clients, that they came back to me the following year, which was this year, and I ended up selling them a new home to move into because their family size expanded, and then selling the current home that they were living in. So for telling them to say no to a bad deal, I ended up getting 2. And to me, that's how it kind of came back to me. And I was able to put a fat check in their hand because they had a lot of equity in their current residence. And that felt really good to do for my people.
That's huge. That's a huge real estate professional sort of lesson as well.
Mm-hmm.
So for anyone that's looking to get into that field, I mean, that's huge. It's really important in any financially related profession to really think about the long term with each of your clients. And even if you are in a transactional role, thinking about how you can develop, once again, that relationship so that when there's the next transaction and the next transaction, the first person that they think of is you, not because of how smart you are or how great you are at what you do, but instead because you've really, really gained their trust and built
that footprint, right? Always leaving that footprint around or some kind of legwork. I actually wanted to ask you, you have a lot of pitfalls, it seems like, right? And it's awesome to hear, right? Because, you know, we don't want the idea that people come up here and everything is handed to them in life and everything comes easy, right? Everything is workable. Everything has to be worked for. And I thought about your statement of ethical guidance, a little interesting, different from Keith a little bit. I wanted to ask, in terms of just guidance, I took away the ethical part fully in terms of everything, but then thought about guidance in terms of like mentorship. How do you feel about mentorship? How would have things turned out if you felt like you had the right mentor around you?
I think I probably wouldn't have made some of the mistakes if I had a little more guidance. I did seek it in some ways, not initially coming out of the bankruptcy. I was just a bit ashamed by the position I was in, that really just didn't want to go and seek help from people that I knew about it. But in other areas, I have sought some mentorship, and sometimes I was met with deaf ears. You know,
the fear of being turned down, or the fear of it not going?
No, it was met with deaf ears.
Oh, deaf ears. Okay, cool. Wow.
I just found that some people, you know, there is no give back in them. So I understand. Trust me, I look at money a little differently. I'm very much a minimalist. I'm a simple person. To me, money is the way to free my time. I value time next to health, you know, and my loved ones. That's the most important thing that I have, is my time. So money is a way to free my time. It's not a way for me to go and purchase a 6-figure vehicle or something like that. That's not something that really wows me. Like I say, I'm a simple person, but I know that I look at how people spend their time. It's the one area that everybody on earth is even in. You all get 24 hours a day. How you use them is going to have some impact on where you end up, you know, long term, you know, how you use those 24 hours. So are you going to go out and march and do, like I see the McDonald's workers? Are you going to go fight for 15? Or are you going to use that time to go learn a skill that you can maybe go make $50 an hour? So it's about how you're using your time. That's a big thing with me. And to me, poverty breeds crime. And that's why financial literacy is so important to me, because I saw the change. I mean, I've witnessed it firsthand, what it's been for me, having access to capital to be able to participate in investments and things of that nature. And I know that it is life-changing. It's just that most people that look like you and me don't have that taught to them growing up, because those gates were locked. Now, because of the internet, those gates are unlocked. So there's not excuses anymore. It's just about you get what you seek. So you have to have the will to go and seek that information and then actually put it to use.
And I'm glad you kind of segued into this, right? And this is where the idea of, you know, my audience comes in, our audience comes in for our podcast here, right? It's the understanding of certain things, the finances, right? It's understanding what is credit and what possibly can someone do with credit, right? You being someone, Mike, who has great ideas in terms of, you know, making business for oneself. what is some of the knowledge you would give somebody from your point of view? What is credit to you, and how would you tell somebody to take advantage of it?
Well, to me, credit is like everything. It allows you to have a seat at the table. It allows you to do things that you probably wouldn't have been able to do before if you use it properly. I always say that anytime you're going to open a new credit account, whether it's a credit card, line of credit, personal loan, you're always looking at what are the advantages. Does it have rewards points? Does it have airline miles? Are you a traveler? Does it have stuff like free car rental insurance? I mean, there's all these different things that I've taken advantage of over the years to be able to travel free, have services paid for that I didn't have to pay for, and just be able to get into things like when I first started my stock account, I funded it out of my line of credit. I paid the line of credit back and the account is profitable. So it also makes it easier for you to just really get anything, car insurance, a job, an apartment. You know, I'm in the business, I do leasing as well. And I've had situations where they were even in every area except for the credit. And that was really the only thing the owner had to differentiate two candidates on. And they chose the person with the 710 credit score over the person with the 580 that had the same, you know, employment history and income and things of that nature. To me, it's just it's a key. It's a door opener.
Very cool. And then, so you also, obviously, in dealing with that bankruptcy, you had a lot that you had to deal with as far as your credit.
Mhm.
So, and I'm not familiar with the process. Please walk us through. All right, you said you had some pretty good credit before, and then afterward, I'm guessing you took some sort of a hit. Where was your credit then? And then what did you have to do to build out of that bankruptcy status?
Well, I did a Chapter 7 bankruptcy. So that's when you wipe all of your debt away, with the exception of two types of debt that they will not remove, which is child support and education debt. So thankfully, I didn't have either of those. At the time I filed my bankruptcy, I was recommended 3 attorneys. I talked to 3 different attorneys. I settled on one that I liked. They made it pretty easy. My credit score at the time of bankruptcy was in the mid 400s. So a 300 is as low as you can go. So I was pretty far in the basement. And when you come out of the bankruptcy, it's just a clean slate. You have nothing. So what I usually recommend is starting with a secured card. That's how I started mine. And the secured card, you fund the card with your own money, but it reports to credit bureaus like a traditional credit card. The downside to secure cards is that most of them don't have any types of rewards or anything like that. And most of them also have annual fees. So I worked the secure card for 1 year, and then I canceled it when I got my first unsecured line of credit.
Wow. Okay. So the secured line of credit means that it's actually backed by dollars that you put in to the account.
That's correct.
Very interesting. I've never heard of that concept. And then from there, like you said, the unsecured line of credit is like a normal line of credit. You're basing this off of your credit score. Someone is giving you some sort of a balance that you can now use from their sources of funds.
Absolutely. It's where the card issuer gives you the credit line. And I also learned a lot about the different card issuers, which issuers actually service which cards, who does soft pulls, who does hard pulls, who pulls from Experian, who pulls from TransUnion. I mean, I made notes as I went along, so I would be able to advise people, you know, in a way so they wouldn't make some of the same mistakes that I made. For instance, the 60-month rule. That's something that I've never really seen posted online, but I found out about it the hard way by getting 2 worthless hard inquiries from Bank of America and US Bank. If you have a Chapter 7 bankruptcy on your credit report that is less than 60 months old, the big box banks, they won't lend to you. It's an automatic denial. It's in the computer. So you really can't go to the B of A's or the Chase or the Citi, PNC, stuff like that, until you've been out of a Chapter 7 for 60 full months. So that made me get creative and go to companies like Capital One, Barclays, Discover. You know, I kind of did a circumvent until I cleared that hurdle, then I was able to go back to those banks and actually get lines of credit.
Very cool.
I'm glad that you actually brought up that secure line, because that's how I built my credit starting from college. You know what I mean? You had to put down at least $200 down or $300 down.
Yeah.
And what it is that $300 is actually your credit line for the time being spent. So you actually don't ever go in like a negative, because it's actually your money being spent the entire time, unless you go past that $300 or whatever secure limit that they provide to you. And then after about 2 years or so, 3 years, or about 2.5 years or so, I believe they ended up providing the money right back to me. And then, obviously provided me with a credit line of double that to start off with. And then it continued on from there. So that was a great point you made there, Mike. I appreciate that one to pass on to my viewers.
They actually return the money as soon as you cancel the account. So there is no set amount of time. It's just that when you cancel the account, you have to have a zero balance, and then you get all of your money back. But what I try to tell people is a lot of stuff you see printed online, it's just not true about at least personal credit. Business credit, totally different animal. But on the personal credit side, they recommend you staying below 30%. And really the sweet spot is 10%. You really want to be below 10%. That's why if you can get with card issuers that will give you high limits, you can still be using a fair amount of your credit and stay below 10%. So I always tell people avoid store cards, because one, you can't use it everywhere. Two, what if you move to a city where that store isn't really, I guess you could order stuff online, but I think it's best to have at least something with a Visa logo, something with a MasterCard logo, and something with a Discover or American Express logo in your portfolio of cards. And having alliances with multiple lending institutions. I found that to be very powerful too, as far as establishing relationships with banks and credit unions.
Couple of quick questions and then a practical one. But
okay,
you brought up these two terms, the soft pull and the hard pull. And I just want to make sure that our viewers are aware of what those terms mean.
Sure. A soft pull or soft inquiry is when a potential funding source, like a bank or a credit card company, takes a look at your credit and it does not have an impact on your credit score. A hard inquiry is just the opposite. They're still taking a look at your credit, but it's a hard inquiry. So it does have a small impact on your credit score, usually somewhere between 3 to maybe anything under 10 points, but it stays on your credit for 24 months. So,
okay. Very interesting. And then, so the next question is around, so you talked about the secured line of credit, but for someone who has never heard of this or just doesn't know where to start, how do you actually go out and find a secured line of credit?
There's lots of banks and lending institutions that have secured lines. I say just make sure that they're an institution that's going to report to all 3 credit bureaus so you can get the credit for your transaction history. So I went with US Bank because US Bank reported their secure card like a traditional credit card. I worked that for about 1 year before getting my first unsecured, which was a Capital One. And at that time, I canceled the US Bank because, like I said, most secure cards have annual fees, and I got my money back.
Okay, cool. And then, so when you're applying for this, are you doing this online? Are you going into a physical branch? How do you really go through that process? What information do you need to have compiled before you go through that process?
It varies on the bank. You may want to go into a branch because you just might want to start building a relationship with a banker. Actually, that story I told you, the real estate story, the young lady, it's a husband and wife. The wife has been my personal banker for 8 years. So there's a long, lengthy relationship there as far as, she handles my banking for me. So I'm letting her handle, deal with my money. So there's some trust that was already built there. In regards to what you need to apply, most banks, when you're talking about credit cards, you're talking about stated income. So stated income means you don't have to provide actual tax returns, bank statements, or things like that. Now, this isn't financial advice for information purposes only, but I would say if you put down an occupation, if you say you're the janitor at the local elementary school, you probably shouldn't write down that you make $140,000 a year. You kind of want your income to maybe feel like it matches up with the profession that you have. But again, in most cases, this stuff is not verified unless you do something that triggers what's called a manual review. Then they're pulling back the layers on the onion and, really getting down to the nitty-gritty.
Okay. And then tell us a little bit about how you're familiar with that concept of a manual review. Has that been done to you? Is it something that's common in the space, in the credit space?
Well, I wouldn't say it's all that common. It's just sometimes people put down things that just the computer doesn't like. Most of the reviews are, when you apply for a credit card, in most cases, it's done electronically through an underwriter, but the underwriter is a machine. So the underwriter is going through a checklist to see if you check box 1, 2, 3, 4, 5, 6. So maybe if you check all the boxes, you get offered a $5,000 credit line initially. Maybe if you don't check as many boxes, but we'll still start a relationship with you, maybe you get $1,000. But there are some things that you can do as far as your employment, income, and other questions that may be on your application that can raise eyebrows, that can keep you from being approved at all.
Super interesting. A lot of the times we like to talk about the impact that technology has on certain financial systems, and then credit here. I mean, that's something that is really revolutionary. And I've actually just was in the office with someone not too long ago where they were, dealing with the fact that a computerized system had actually shut down their credit account because they had paid off a balance. It was too much money that they paid off on the balance, and the computer actually shut down and limited their ability to use that credit card because of the fact that they paid off the balance with too much money. They put a hold on the account. And
wow.
I
can see that though. It's just probably just a trigger. It's a trigger that was set. You can actually make requests to have certain triggers set for your account. A lot of people don't know it, but it may have been a trigger that card issuer set for that account because of that person's credit profile.
Yep.
That's what may have triggered that.
And the thing is once, this guy got on the phone, there was nothing that the people could do about it because the system had made that change. And I just thought, wow, that's such an interesting world that we live in, where a computer can actually have complete autonomy over the way that someone's financial world works and their financial life. So don't want to harp on that too much, but I do really appreciate you sharing that information and thinking about that. So at this point, I think we're at a pretty good place in the conversation. I don't want to overdo some of the questions that may not be particularly pertain to what we're talking about today. So what I do want to kind of transition into is thinking about you're writing an ebook and you're teaching people some of this stuff when you can. And like you said, you've been documenting your process, which that alone is something that I think is an important concept for our viewers to understand. When you're going through something and you're learning about a process, when you take notes and document what you're going through, that can actually serve as something that's extremely valuable to the next person that you may be interacting with. So the reason I'm saying that is to back up and to ask you a little bit about what is your educational process when you're thinking about teaching people what you've gone through, and more specifically, what are some of the most important lessons, and how do you get that stuff through to people without it seeming super boring?
Well, I think if a person has made it up in their mind that it's going to be boring, it's just going to be boring to them. It really just becomes what you want as far as wanting to improve. So to me, it's not sexy. It's not the most flashy, fun stuff to talk about, because a lot of it starts with discipline. And then it starts with doing your homework. You know, you need to research certain cards before you accept an offer. You need to know what type of benefits that it's going to have. And I just think you need to, if you're seeking money, you need to look for money. Like, for instance, on my YouTube channel, I have over 100 videos talking about credit cards, credit unions, banks, crypto, real estate, side hustles, grants, travel hacks. I mean, basically anything that helps you level up financially. And I think it's just where your focus is. You know, if your focus is on getting better at whatever it is, you're going to get better. It's
But how do you get somebody to get interested in that then? Like, so not in terms of interest, but like I have an interest in it, right? How do I now connect to it fully? I look up Mike Nash's videos on YouTube. I study, I read, but it's connecting to me on a certain level, right? But it's not connecting to me on a holistic level, right? What do you say to those individuals who are sitting there, who've done the time, who've done everything in terms of the reading, watched the videos, watched your videos, or watched any videos, right? And was like, dang, there's something missing for me. What can you say to those individuals who feel like, hey, there's something missing there to make me keep going forward?
I think it's once you start experiencing it. When you start experiencing the benefits that having a strong FICO score and profile, because a lot of people, they'll spit out a credit score, but credit is a score and a profile. It's about what's on your actual credit as well. Because you got some fabricated good credit having people out here that's just on authorized user accounts and stuff like that. And trust me, the lenders can see that. But like, I usually tell them about, well, for instance, I have a teenage son, and we did a trip to Ohio State University in July. He's only in his sophomore year of high school, but just to expose him to what a large college campus looks like. I paid for that trip with points. I paid for the Airbnb, I paid for the gas. The only thing I had to really buy was food while we were there. And that was a totally free trip just from credit card points.
And these are points you gain off of purchases and whatever,
using the card, using it strategically. Sometimes it's utilities, sometimes it's groceries, you know, sometimes it's cell phone bills. I mean, when I select a card, I'm looking at what types of advantages it has. Like, I have a card that has free car rental insurance. So if I go rent a car, I don't have to pay that daily damage waiver. The card picks it up. You know, so it's like, or price matching. I mean, extended warranties. There's all types of different credits. You know, I have a nephew that he's big on travel. So he has a great travel card, and he's flown actually to Paris for like $100 because he has so many points. So
wow, that's awesome.
Yeah. So it's when they start seeing the benefits and how much easier it makes life. As it doesn't make it easy, it makes it easier. That way you're not the person like one of my clients that had a payday loan. She was trying to rent an apartment through me, and I got her the apartment, but she had a payday loan that popped up on her credit. It was $900. The total repayment with all the interest and fees on a $900 payday loan was going to be $2,600.
Wow. Seriously?
Absolutely. No lie.
And connect me as to why. Like, I am an individual who's not understanding why it would go up so much. Why would it go from 900 to 2,600 plus? Because
the interest that they're able to charge and the length of the contract just determine that. It's like, as opposed to me, where I can go to one of my credit unions. I'm in a credit union in California. I live in Chicago. Never been there, applied online, got approved online, applied for the line of credit online. I've borrowed from my line of credit. My rate's 8%. So if it took me, 6 months or whatever, it's not even going to be 8% because it's an 8% APR, annual percentage rate. So it's just how much easier it makes your life when you realize that you're not the person that's paying more for everything. Like the person that has poor credit that pays more for car insurance, that pays more for just to borrow money, like the scenario I just described with the young lady.
It's sad that, you know, those are
Mhm.
situations that everybody deals with. In most cases, I've been there where I might have a bad credit score and I'm looking to get a car. I have to put down so much on just
Mhm.
that car,
Yep.
and plus whatever fees on top of that, just to
Mhm.
continue the finance if I'm financing or leasing, or you know, what have you.
Or you may need a
And
cosigner.
I will need a cosigner. That's the thing. I will need a cosigner, right?
Mhm.
While another individual with close to around 700, 800 credit score, there's no down payment at all. Even though it'll say something like that on the
Mhm.
commercial will say down payment of this.
Yep.
When that person goes there, it's no, you don't need anything. You just pay your
Mm.
monthly fees.
Pick the one you want,
Yeah,
drive
that's it.
off.
Wow.
Pick
Interesting,
the one
right?
you want, drive
Crazy.
off.
Very
And
interesting.
your interest rate is going to be so much lower. A person, particularly with car financing, remember banks. So whoever you bank with, whoever it is, if you have a traditional savings checking account, well, the savings, maybe you're getting 1/4 of a point. Most checking accounts, you might be getting like 1/10 of 1%, and a lot of savings accounts too. But then the bank, which people think banks are in the real estate business, never have been. They're in the lending money business. So they'll take the money that you put in, you put your 20 grand in, and you're getting 1/10 of 1% interest, but they'll go loan that money out and they'll charge 12% to a person that has marginal credit for a car. They'll go and give someone a personal loan and charge 12 or 13%. So it's like, that's how they win. They win because they take the money that you put in and then they go loan that money out for cars, for motorcycles, for personal loans, for credit cards. These are all fairly high interest instruments. Homes is what they're least interested in. Banks don't really like real estate as much because it's too hard to get the asset back, you know, and they just don't make as much on the interest as they do with a credit card or financing a car. They can easily go repo your car. You know, you can hide it, but they'll find it. They'll find it eventually. They'll get
That's
the car.
crazy.
Mhm.
Let me ask you, as someone coming from the educational field, I want to kind of ask you, and going back to financial literacy in its entirety, because this was a lot of great information you provided us today. When should educators be teaching about financial literacy, such as, you know, i.e. age, time?
I started my 15-year-old when he was about 11, and I think I was several years too late. I think
Ooh.
it should be part of primary. I'm talking like second grade, like when you're learning basic math, addition, subtraction, multiplication, division, it could easily be made into financial problems. It's just, you know, my opinion is the system, they want us to go and make someone else wealthy. They don't want to teach you about wealth. So if you never knew that some of this stuff existed, well, why would it be of any interest to you? So I think it should start early, primary grades.
Well, that makes sense. That's basically the average. I mean, 7 years old, that's about
Mhm.
second grade, you had said.
Yep.
That's what studies are saying, or is somewhat at the best time.
Mhm.
What do you, I guess, you know, I want to pass on to Keith real quick, just see if he had a question or two.
Yeah, I mean, it was just a very specific question because I want to make sure that we have this authorized user account and like some of the ways that people are cheating credit. Understood? Or cheating, or you know, the way that you kind of described. I don't know if cheating is the right word, but what is the authorized user account, and what are some other ways that people are like circumventing
Well,
processes?
it's not cheating. It's totally legal. It's just getting someone that has a lengthy credit history. So, okay, first it can be helpful and hurtful for the person that's going to be the authorized user. When you're choosing someone or asking someone to allow you to be an authorized user, you want to make sure a couple things. You want to make sure that it's a card that has a decent length of history, several years, usually, at least. You want to make sure that it has low utilization. So you don't want something that's maxed out all the time because that's going to hurt your score. you know, and you want to make sure that that person is just super responsible with their credit, because although you're not liable for any missteps they may make, as long as you're listed as an authorized user, if their usage has become negative, it's going to have a negative impact on your credit score, which totally defeats the purpose of you having it. And I didn't have anybody to go to with that. That's why I started with a secure card, because I didn't have people in my network that had great credit and were willing to say, okay, I'll put you on a card. Now, I've done that with a couple relatives with my cards. And, you know, when you do that, you just put them on the account. You don't necessarily give them a card, but you let them benefit from the history though, you know. So
Okay.
that's kind of how it works. Now, there is a thing where people actually sell these. And if you have your authorized users changing every 3-4 months, somebody might pay you $500 to be authorized user for 6 months. And then you put someone else on there and you keep changing. If the card issuer gets wind of that, you could get your account shut down.
Wow.
Because they don't authorize like selling trade lines.
Wow.
So I don't participate in that. I have a couple of family members that I've allowed to be on a couple of my cards to assist them with building their credit. But when you talk about selling trade lines, that can be dangerous for the person that has a good credit. You can end up losing, you know, a 7, 8, 9-year account just because of greed.
And are there implications of losing that account that like show up on your credit history as well?
It'll just show that the card was involuntarily closed by the card issuer. I mean, if you didn't have, well, the other thing is, if you have a balance and you get an involuntary closing, okay, the money is due. So no more of this paying this minimum fee. Like, you need to actually get it paid off, or it's going to start having a negative impact. So I just would never participate in that, because I just think it's too dangerous for such a small financial gain. But people do it all the time. They sell trade lines.
Wow. Very interesting, man. I really appreciate you for sharing all this information. I think this has been an incredible episode, and I've definitely learned a lot myself. Fabyan, how do you feel?
I feel great over here. I just wanted to ask one question. I mean, you had alluded to it earlier, Keith, regarding technology and just technology and financial sector, right? I wanted to ask, Mike, you know, how do you see technology playing a role in how we as a society are interacting with money and the systems?
I think it's going to keep trending towards cashless. It's just, you know, it's a process just like anything else. Just like once upon a time, people said in the future there will be an e-vehicle. Well, now we got e-vehicles, and we've had them for a while. They're not, you know, the norm is like, you know, more people to have a gas operated vehicle than an electric vehicle, but they're definitely coming. So I think it's going to continue to be where you'll be able to function totally without cash in your pocket. In most cases, like you can now, you can pay with a Cash App, you can pay with Apple Pay, you can pay with a credit card, a debit card. I mean, all of these ways you can pay for things that don't require you to physically pull out a $20 bill.
Wow, man.
Cool.
How do you feel about, I mean, as being a crypto and Forex trader, what are some tips or, you know, little hints that you would provide to any of our viewers who are just now getting into it, or those, as well as those who are currently trading?
But the biggest difference between crypto and stocks to me, because I'm more of a stock guy than a crypto guy, but I do hold some crypto, is that typically with stocks, I buy companies and trade companies that have a history that I can analyze, because I took a couple years to learn how to read charts. So I might as well be able to use that, you know, that knowledge. With crypto, some of this stuff is really backed by nothing. You got some really garbage coins out here. But then with crypto, the biggest difference is all you really need sometimes for a coin to run is to get some type of social media buzz and get a celebrity endorsement. You get some celebrity endorsements and you'll look up in coins like Doge. I don't know if you're familiar with the Doge coin.
Yes,
but
yes.
it went from a nickel. I remember I used to play with that coin when I first started trading on Robinhood. It was like so many 1/1,000,000th of a penny. It was just worth nothing. And then it ended up going all the way to 74 cents. So if you got in at that bottom and held, you became a millionaire. And then Elon Musk talked some crap about it and it just fell out the ocean.
Yeah, my cousin, I know a family member of mine who took advantage of it and made a couple of 100,000 on it. And
I can believe that.
they did very well. I remember when it was like 0.008 and he had told me to go involved, and I was like, no, that's not going to do anything. That's as you said, BS coin. I was like, oh, that's just a made up coin. I read up on everything in Reddit and all these articles, and I sat back and watched it climb, and I'm just like, I am missing the window of opportunity when it was at 0.008. By the time I got in, it was probably a cent. Made some money off it, but even still, not as much as I could have if I had started early, as you stated before.
I want to start to interject a little bit because I don't want us to get like too caught up in the crypto conversation for a multitude of reasons. One of them being when you're talking about a lot of these meme coins, I think it's important for our viewers to like have different prefaces around like what's happening.
Yes.
And I think you guys are managing the conversation very well. But when it comes to like missing out on certain types of opportunities, especially in that meme coin space, no one should ever be trying to, and this is not financial advice, but you're always playing behind whenever you're making an investment decision based off of any sort of an emotion, right? And a lot of what you're seeing in the meme coin space is around that. So I'm going to just leave that there. And I want to try to steer away from talking about crypto too much in general. So I just want to kind of put that out. But I'll let you guys finish your thoughts.
That leaves food for thought, right? I mean, honestly, for our viewers to even thinking about it. But, you are right in terms of the meme stocks. There are meme stocks, meme crypto, anything in that sense. It is based off emotion. It's based off a lot of things. And sometimes it's played right. You can make a lot of money. But also you could lose a lot of money as well.
Absolutely. Yep. Agreed.
That's crazy. I love it, man. I appreciate this whole conversation, Mike. I don't even understand. Keith, I don't know if you have anything else to say here. I'm actually good to go. This was awesome.
No, I think this has been an incredible conversation once again. And I've once again just learned so much. And I thank you so much for coming on, Mike, and for sharing your thoughts and for being so open with us about some of these touchy topics and things that people are sometimes ashamed to talk about. And that because that's so much value to our viewers. Like being ashamed can actually put you in a worse financial position, right? So being open and being honest with yourself first, right? It's actually something that adds to your financial literacy, like being able to look at your situation more plainly and not as, once again, from this emotional sort of a standpoint. So thank you so much. And thank you for joining and for watching this episode of Cash Rules. I think we are on to something really cool here. Michael, thank you for coming and bringing all your expertise. And Fabyan, thank you for being here. Any closing remarks?
Hey, as usual, if it don't make dollars, it don't make sense.
I echo that.
Good stuff, guys.
Thanks, man. This was awesome. I appreciate it.